Colin, so we were just digging into some scenarios that investors are anticipating. I wonder if you think about the upsides and the downsides in terms of the best outcome for this election, what would you say?
Look, I don't think this is going to be the seismic election that some people think it's going to be. In other words, I don't see a major pivot in South African policy as a consequence of this election. It may well be that 2029 turns out to be that election. This election, I think, will likely see the ANC, the ruling party, and its president, Cyril Ramaphosa, re-elected and form the new administration. And that will be either as a majority, as a straight majority, or as a narrow minority, but in the 45 to 50% range. And that will provide it with the ability to cobble together a simple coalition with another party like the IFP, as you suggest. The real issue for South Africa and for the market is that we've had a decade now of below 1% growth rates, in fact 0.8% growth rates. And South Africa internationally is now seen as a bond market, effectively a bond market dream and an equity market headache for international dollar investors, because the returns on the JSE reflect the fact that we have a low growth trap in South Africa, and on a dollarized basis, the returns on the JSE have not been competitive. So the investors are anxious that they should retain on a probability risk-weighted basis a bond market that provides these high-yielding returns, yet low risk, because the fiscal and monetary policy in South Africa has been quite conservative.
But do you think, I mean, the survey that we just recently conducted says that a lot of investors are a little bit more optimistic in terms of some of the fiscal reforms that we've seen as of recent. Do you think they go far enough, though, to give investors confidence, and especially international investors, to come back into this market?
I heard you say your survey was a domestic investor survey, and I think that does reflect domestic views. But international views, as I say, South Africa is really seen as a bond market, not an equity market. It's highly liquid, it's very tradable. The currency moves along with the shocks that absorbed both globally and domestically. So it's an attractive market for international large institutional investors to play. But it, over the last period, due to low growth, has not been very attractive as an equity market. So the question really is going to be, assuming that I'm correct, that there is a re-election of President Ramaphosa as the president and he forms a new government, will he do anything differently in his second administration to drive an economic growth plan that, with implementation, is going to be breakout for the government? And that is going to be seen in who does he form the new cabinet with? Does it reflect a different intention to grow the economy?
Yeah. Colin, Joumanna over here, maybe a big picture question that ties into what you were just saying now, vis-a-vis what the next government would do and what their policy priorities are. When I think about the South African economy, there are two things that I think of almost instantaneously. One is the electricity issues that have been plaguing the country for years now, load shedding, and of course they decrease the amount of that's happening in the run-up into the election, but it's still a big issue in the South African economy. And then the second thing is just the wealth income distribution issue. There's so much inequality in a country like South Africa. What is going to change post these elections? If Ramaphosa does get elected again, if he is president again, how should the priorities change?
Great question, Joumanna. I would say he needs to ask the question in a single-minded way: how do we get out of the low growth trap of 1% and unemployment rates of, on a broad basis, including those who've given up looking for work, 42%. And to do that, he has to go way beyond just fixing the basics, electricity, energy, and logistics problems and crime problems. He needs to have a fiscal plan, which is a breakout plan, to get 4 to 5% growth rates in South Africa. To do that, he needs the best brains around his cabinet table. He needs to make sure that there is a decisive break with a fiscal impulse that has been non-stimulatory. We're going to need to see a fiscal plan that matches excellent monetary policy that we've seen from the South African Reserve Bank, and he needs to have that level of professionalism and excellence on his fiscal team.
And can I just ask you the perennial question about Eskom? What is the solution? How are things going to get shaken up at Eskom?
Well, Eskom, they've made progress on the management and the governance of Eskom now, but there's underlying corruption problems in all of these state-owned enterprises, so they need to dig deep, they need to prosecute wrong behavior, and they need to get far greater private sector participation. That means the regulatory regime, including the licensing and the investment in transmission, needs to match the calls that they are making for private sector participation to make it possible for that to be fast-tracked.
Colin, we also wanted to talk to you. I mean, what's been interesting is also how this Anglo-American, also BHP deal has been the timeliness of it, especially in relation to the election. I wonder what you think that says about South African assets in particular and how this deal and these negotiations have played out. Do you think this is potentially leverage for South African authorities and also for local assets?
Let me just say, I don't think the BHP bid for Anglo has anything to do with their attraction to the South African assets of Anglo-American. It's really about the copper assets of Anglo-American offshore, excluding South Africa. But insofar as their ability to implement and execute on the deal, BHP or Anglo-American on a standalone basis have a lot of wood to chop with the regulatory authorities in South Africa. They have to deal with the South African Reserve Bank conditions, which gave permission for Anglo to list in London, and they have to deal with the competition filings that will inevitably ensue, independent of whether BHP takes over Anglo-American or Anglo-American executes on its restructuring strategy. And that's not so much from a competition point of view, but from the public interest aspect of competition law in South Africa. So there are some complicated issues. I would just say, to the extent that Anglo and BHP can move towards a friendly deal, that will smooth significantly the path for BHP and Anglo to getting a deal done and through the regulatory authorities.
Is your expectation that that will happen?
Well, certainly the fact that they are now talking for the first time and have a week at least, unless there's a further extension, is a positive indication that they intend to do a deal.